Very much, Manoj. Appreciate you joining in and good getting those stock trades from you and then market view as well. Now, time for market laser. And I'm going to put out two charts here, two separate stocks I'm going to talk about. And both are, if you had to kind of club them together, you probably will say that they have exposure to the agri sector, really. Let's start with ITC first up, which will come up on your screen. And this has been the leader, right, for the market, near all-time highs, ITC. For the year, while the Nifty has not done very much, ITC has done very well. It's up 15% in 2023 so far. No mean feat. The question that I'm asking is, are we looking at the first signs of trouble? If we can have the header up. And I think I'll tell you why. You just look at the chart, and I think it should tell you the story. What I've done is I've looked at where ITC is now bumping into significant resistance. So you look at the start point, which is the 18th of October 2021. That is the start point. ITC saw a swing high on that day. Then there was a big correction. So that's the starting point. And then the next touch point is in November of 2022. So it took more than a year for ITC to come back to that same trend line. There were 2 or 3 touch points in that period, October, November 2022, a year later. And now we're in 2023. ITC is once again at that particular trend line. There are two things, right? I mean, so if you look at what happened after October, November 2022, once it hit this trend line, there was a significant price erosion, significant price correction. We are back at that trend line. And the point is, ITC now is sitting on significant gains. You throw in some of the fundamental aspects, etc. as well, which is nervousness around whether we will once again for the third or fourth time have a good monsoon, etc. And this perhaps is something you might want to pay attention to. But I think the primary thing is it is sitting on significant outperformance relative to the rest of the market. So that is point number one. A strong cross above this particular trend line, and if it keeps moving, I think these doubts disperse and we're looking at new fresh moves, and we'll talk about that when that happens. But for now, for 2 or 3 days now, it is bumping into this trend line and falling. The second one is Escorts, right? And this is a more clearer proxy to what's happening in the agri space. And here we are, it's again, there we were looking at ITC bumping into a resistance. Here, Escorts perhaps is bumping into a bit of a support level. Again, the charts speak for themselves. The low was June 30th, 2022. That is a June market low. It saw a secular move up. After hitting a high, it has been sloping downwards. From the June 30th low, the trend line extended upwards, meets the price on the 9th of February 2023, which is not very far back. And after bumping into that, we have a significant price move up, and now we are bumping into that once again. So, again, this looks poised for a break. Will it break or not, I think is something which we need to watch out for. But if it does break, these things can extend for a little bit. We can extend projections, etc. But we first need a clear confirmation close below this trend line to move forward with a particular view. So ITC and Escorts both looking a little shaky. One needs to be a little watchful. I'm not saying that it's done, but these are at important kind of levels from where you could see some price erosion. Dipan is still with us, and I want to get his thoughts on both these names if he has a view. Dipan, over to you. ITC and Escorts.
Yeah, Prashant, see, ITC, I get it that, it's reaching a resistance level, and generally I like to be underweight in ITC. Reason being that apart from the tobacco business, all the other businesses, they have gotten scale, but never really have contributed materially to the bottom line. And they are, in compared to the peer group, those businesses have not done as well. So I'd like to be underweight ITC. The tobacco business anyway is very mature and generally has very low single-digit volume growth rate. So that doesn't really appeal to us. Escorts may be interesting, but the stock is very expensive compared to its peer group. And within the auto or the four-wheeler or the agricultural machinery space, preference would be for Mahindra and Mahindra per se. And if there's going to be El Nino, which is most likely for this particular monsoon season, then we need to be a bit cautious about all these agricultural plays, because in the past, whenever monsoons have failed, it does affect the demand for tractors.
Okay, thanks a lot, Dipan, for joining in, and thanks for waiting by as well patiently. Well, the pre-opening rates have settled absolutely flat, but a couple of